right, welcome back to Dirty Boots Capital. Today we have with us Chris Odegard. Chris wrote this fantastic book right here, Get Off Your Ass and Manage Your Money, right? Which is should be dear and close and near and dear to all of our hearts here. So Chris, welcome to Dirty Boots Capital.
Hey, Tony, thanks for having me on. I really appreciate it. Looking forward to speaking to your audience and spreading the good news.
Yeah, so we met I don't know, a year or so ago, running around in a similar circle, trying to help people understand what's going on in the world, all the craziness. And so we met at a Rebel Capitalist Live event about a year ago at George Gammon's event. I think it was Orlando.
Yep.
And then we just recently met again at Freedom Fest in Memphis. So you're doing what a lot of us are doing, going to these conferences, talking to people, understanding where their fears are, and trying to give them some ideas, some pointers on how to overcome those fears and all that sort of stuff. So what we do just doesn't happen organically. So what got you to this point, Chris? Like, who is Chris? Like, where did you come from? Were you like a W-9 or a W-2 employee that just stumbled into this, or were you fed up not being able to get to retirement? Like, what happened?
Yeah, a little bit of all the above. I was probably like many of your listeners are or were at one time. I grew up in a family of ease. If you read The Cash Flow Quadrant by Robert Kiyosaki, I was an employee. That's what I knew. You know, go get an education, get a job with benefits, and work there till you die. And so I was on that path and putting my money into a 401k, which was advised to me by somebody who was close to me and I trusted. And so that's what I did. Now I call that the 401k highway to mediocrity. But anyway, so I was an employee, and that all was going about as well as it does for anybody, which we could talk about some numbers later, but which doesn't really you don't really end up at a very good place. So I was on this mediocre path, and in my mid 40s, I had what I fondly referred, now I can fondly refer to it, wasn't fondly back then, in my mid 40s, as an illiquidity event where I lost 55% of my assets and thousands of dollars a month in cash flow. And that, in my case, happened to be divorce, but it was also came around the great financial crisis at the same time. So it was even worse. It was that, and then that
double whammy.
Yeah, it was a double whammy. So here I am, mid 40s on a mediocre path. It now just became very bad. What do you do? How do you recover from that? And a friend of mine, coincidentally, I don't think he even knew what was going on with me at the time, recommended a book, which we all know, and it turned out to be Robert Kiyosaki's Rich Dad, Poor Dad. And I read that book, and I was like, wow, there's this whole other world of personal finance and investing. And so I started going down that path, I would say, as quickly as, I thought was prudent, and as I had the resources and the education to do that. And so I just pretty much left the stock market and started going into alternatives, single family rental, small multifamily. And, at this time, I've tried many things, a lot of them which worked well and some of them which didn't work very well. And then 10 years went by, and I was ready to fire the man and not work for anybody anymore. And I thought, wow, I'd like to share this information with other people. And I started my blog at theprolificinvestor.net, and then later became the book. But as I started the blog, I started to think about, well, why should anybody listen to me? What credibility do I have? And it's like, at this point, I was a sophisticated investor. I had a bookkeeper, and I get quarterly financial statements, and I know exactly but I didn't have that 10 years ago. And I'm like, damn it. Too bad I couldn't go back and compare, like my net worth where I was back then to where I am now. And then there was this flash of brilliance. There's these people involved in a divorce called lawyers, and guess what they make you do? They make you take an accounting so you could make that 55-45 split. So I actually did have a record, and I had increased my net worth by 5.6 times over those 10 years and quit my job. And that would have never happened had I stayed on that conventional path. And so I thought, okay, I think I've got some credibility. I'm going to start writing and teaching, and hopefully I could either, prevent young people from ever getting on that entrance ramp to the 401k highway, where I could get people off at the very next exit. So that's kind of me. So I was a W-2 guy.
Wow. You basically did the entire interview in like,
sorry about that.
I don't even think you took a breath in any of that. I don't think you took a breath. So I'm going to break that down I'm going to
Okay.
break that down a little bit. So basically, you were in a situation that many folks either have found themselves in or are
Mm,
finding themselves in, right?
yeah.
You woke up to your financial situation in your 40s and you said, hey, I'm not on a sustainable path, right?
Mhm.
So
Yep.
again, for the listeners, for the viewers, we all need to do that self-assessment. Are we on a sustainable financial path here? Maybe we
Mhm.
are, maybe we aren't. And if we
Yep.
aren't, we got to take some action to do better, right? Chris looked in the rearview mirror and he said, this doesn't work. This isn't going to work. He's now in a much, much better place. God bless him. And congratulations, Chris,
Thanks.
on your success there. So with that, you experienced some issues, sure, divorce happens, and a lot of the viewers and listeners, sure, we've experienced that. I've experienced that myself in my own life. But some of these things that you experienced were no fault of your own. GFC,
Mhm.
the
Mhm.
global financial crisis, that destroyed some of your wealth, and that wasn't anything you did bad.
Yep.
And whether the folks listening and watching this realize it or not, that can come at you pretty quick.
Some of it's
And
coming at
so,
us right now.
yeah,
I
yeah,
mean,
and so through no fault of our own, that wealth can be destroyed.
mhm.
And if
Yep.
we're not actively participating and watching some of these things, that can wipe us out, because we know it's very easy to get wiped out. To
Yep.
build ourselves back up again,
Mhm.
you
Hard.
can get wiped out in a matter of like a day or a week
Mhm.
if there's a crash. To
Yep.
build yourself up takes years, if not decades.
Mhm.
So you experienced that and you said, well, forget this. Never again. I don't want to experience that
Right.
pain. So you put some safeguards in place. So again, a lot of the people watching this are going to resonate with that. I certainly do. And then the other piece that you mentioned quickly was, you also, it seems like you did a lot of trial and error after, or maybe during and after this awakening, I'm going to call it. You did some trial and error. Let me try
Mhm.
this. Let me make some cash flow there. Maybe it works. Maybe it doesn't. Let
Yep.
me go try this. And I think a lot of people get into that. I speak with a lot of folks who do, well, I tried investing in stocks, but that didn't really work for me. So I tried doing, options and puts, and that didn't really work for me. Then I tried network marketing, and that didn't work. So they're doing a lot of this trial and error.
Yep.
And what we want to do is try to help fast forward folks to a better place by helping them realize these issues that you experience are not solely issues that Chris experienced. These
Mhm.
are issues that we're all going to experience at some point. And we want to fast track folks to how you got to achieve such great success. So with that, a big part of, your goal was to have a great retirement,
Mhm.
right? To
Sure.
like have a great, whether it's through quality of life or income stream, cash flow, whatever it was, that was your dream. And I think that's the dream for a lot of folks, is to have a great retirement. So what are some things you put in place that some of the viewers and listeners can do to have, put in place to have a greater retirement in the future?
Well, you talked about trying different things. Well, I mean, the world of it, I break the world of investing into two categories: conventional investments, stocks, bonds, mutual funds, pretty much everything that's publicly traded, and alternatives, which is everything that's not publicly traded. And so, 90+% of the population, I would estimate, is over here in this conventional world. And the alternatives have all these advantages. And unfortunately, there's so much money to be made by, the financial advisors and the institutions with assets under management. We're constantly being bombarded with this conventional wisdom. It just doesn't work. It works for really high income and really high net worth people, but that's a small percentage of the population. So if you want to get to financial freedom, which I'm like, that's not about age, that's just about money. Or if you want to get to your traditional retirement place at 55 or 65, you either have to be a very high income earner. I mean, you really have to already be wealthy, or you have to start looking at the alternatives where you can get there faster because of all the advantages that they offer.
Yeah. And so, we see it all too often as far as the education system. They'll talk about the conventional investments. If if they talk about investing at all, they're going to talk about conventional investments. They're not going to talk about alternatives. I don't know why. I have my suspicions. The same thing when you go into a job, when these young people go in and they do their orientation for a job, they're going to be introduced to the 401k plan. And again, it's those conventional investments they're going to be introduced to. There's nobody else there talking about alternatives and the benefits of alternatives.
And they're going to be opted in automatically to the 401k at a certain percentage of their income and in a certain mix of funds. I mean, it just, you get out of life what you put into it. So with these conventional things, you're putting absolutely no effort into it. So you're going to get a very minimal return. As long as you understand that, and that's going to leave you in this very desolate kind of place, then more power to you. But for the people who want to have a better quality of life, you gotta put in a little bit more time and effort.
So you're an educator. You wrote this book, Get Off Your Ass, Manage Your Own Money. I've read it. There's a lot of wisdom in this book. It's, I don't know, 116, 120 pages.
You can read it in 2 or 3 hours. There's a lot of pictures too.
It's a quick read. It's you're not talking like financial planner speak. You're actually talking to like the average Joe out there. I was able to understand it, and I'm not a super smart guy. So thank you for writing the book at a level that I could understand. But basically you're an educator out there. You realize that there's a lot of people out there that are never going to be able to get to retirement unless they start thinking outside this conventional wisdom box. Alternative assets, as in, define that for us. Like, what's an alternative asset?
Pretty much everything that's not publicly traded. So that would be your single family. That would be every subcategory of real estate. Your single family rental, self-storage, apartments. That would be gold and silver, precious metals, commodities, cryptocurrency, private lending, private equity, anything that isn't on the stock market is pretty much an alternative investment. And it's usually a private type of, it's private ownership. You and a bunch of people or a couple partners, you own something together. ATM machines, oil, gas, and gas wells. This doesn't mean that you're buying a stock of a company of Exxon. You actually own a portion of these 175 oil wells out in the Bakken or wherever.
Yeah.
And you get the tax benefits and the leverage and all the things that go along with that.
Yeah. I love in your book how you talk about investing in ATMs, because I was like, investing in ATM, you can do that?
You can syndicate anything, right?
Right. You can syndicate anything. And basically syndication, for folks that aren't familiar, it's basically just, some folks coming together with their own cash to be able to buy something at a much higher level, something much more expensive that they ordinarily wouldn't be able to buy on their own. So if somebody's selling a block of ATM machines for, say, $5 million, I wouldn't be able to buy that on my own. But if it's me and Chris and Jane and Joe and we all get together, we can all bring enough to the table as partners to be able to go and buy that. That's syndication. And a lot of us are looking around and we're looking at the economy, and I'm looking at facing into a recession and the things, a potential recession here. There's a lot of manipulation in the system, but one of the things to get the economy going on the right track with production and with greater GDP, which everybody wants to, I think, the politicians and the economists, everybody's going to want to see greater GDP, gross domestic product. The way to get there is through energy. You got to put energy in to be able to get better, more output.
Right.
And what is energy? Energy is oil and gas, things like that, right? Electric doesn't come out of the ground. Electric is created by oil, coal, gas, nuclear, right? So we're looking at investing in those, to your point, those alternatives, right? Oil, gas, things like that, because we see that as a way to hedge our bets and really experience a tremendous upside. So it's a matter of just looking at what's out there. Read some of the headlines, look at what's happening in the economy, what the politicians are talking about. And not that we always like to listen to the politicians.
Listen to some other people.
There's some, listen to Chris, right? Listen to Chris, go to his website, read his blogs. But it's a matter of collecting all this data and wrapping your head around what is going on. So alternative investments in energy, alternative investments in terms of real estate syndications, and I want to talk a little bit more about real estate syndications and why you're high on real estate, because that's kind of how you ended your book here, is really gravitating towards the real estate and all the goodness that
Right.
offers people beyond just cash flow. Because there's a lot of things in the headlines today that are showing we are moving more towards a renter nation. We need
Mhm.
more rental units
Yeah.
available for those renters, and that's going to happen through syndication. So help break down why you're so high on real estate syndications.
Yeah. Well, I mean, I try to keep my investing to things that are, I don't invest in luxury items, right? So something like housing, whether it be a single family rental, people everywhere got to have a place to live.
Basic need.
It's a basic need. And we are switching from kind of an ownership nation to a renter nation. And the gap between the monthly cost to own is increasing. So it's cheaper. It's becoming more and more expensive to own a house, therefore cheaper. So I like the syndication model. We call it passive. It's not really passive. If you put your money in a 401k in the stock market, you're passive. You're doing syndication. There's quite a bit more to it, but I like it because you can get into bigger deals. I think you make, and I've done some math on this. If you took a single family rental and you put $25,000 down and you got a single family, like a turnkey property or something like that, or you put $25,000 into a syndication, and there are some syndicators that'll take as little as $25,000. You're gonna have less. You're gonna spend less of your time in the syndication, and you're gonna make more money. You're probably gonna make double. Instead of making a 10% ROI on a single family rental, you're gonna make 20 or better. And so I just look at that's the main thing I look at is I don't have to manage the property. I have to find a good syndicator who's got all the right team members in place, and that's the the easiest place to make your money. But so it could be self-storage, it could be mobile home parks. It's all housing or where people keep their stuff. Those are things that aren't going to go away. And energy's on that same thing. It takes energy to run the economy. You look around your room or your house, everything that is there has some element of a petroleum product in it.
Yeah.
So
absolutely.
And I've been hearing for quite a while now. It started with one person, and now I'm hearing more and more that we have kind of an energy crisis coming because of the green movement and the demonization of oil. That the supply of oil has been constrained, but the demand is still growing. So it's only basic economics that it's over the long term. We think the price is going to go up, and so you can either be hurt by that inflation as a consumer, or you can benefit by it by being on the other side, by being a part owner in that stuff that comes out of the ground. So
no, you're absolutely right. And why we're poking at some of this oil and gas stuff is because you're right. There's been this ESG movement, which diverted investment away from exploration of oil and gas and those even coal, and then the whole wokeism around it, and the politicians push for electric vehicles and things like that, which, oh, by the way, that still needs oil to produce electric cars and run those electric cars on electricity. The electricity doesn't come out of the ground. You still need oil and gas to get us there. So there's still very much a need for that product. And to your point, because that they've been beating that drum so loud and capital has not been flowing into that industry. It's not like if you all of a sudden took $1 trillion and invested it into the oil and gas industry, it's not like flipping a switch that you're
still
going to
be 5 to 10 years before you have any,
right? There's a lot of, building of facilities, exploration, capital equipment that's needed. There's a very long process. So for this period that we're facing into of the next 5 to 10 years, there could be a scarcity of this energy that we dreadfully need. And so that's why we see those prices going higher. But along with that, we're talking about also real estate and apartment buildings. I like where you were sharing, hey, you don't have to self-manage these properties yourself through syndication. The other aspect is you get such better economies of scale when you're dealing with bigger numbers. If you have to hire a property manager for your triplex or quad or 10-unit building, that property manager still needs to do, a handful of things that he needs to do, whether it's a 10-unit building or whether it's a 100-unit building.
Yep.
They still need to do those things. But if you can amortize that cost, those basic costs over a larger number of units, that efficiency comes back to you in terms of a greater cash flow, right? You also are dealing with folks who either property managers or syndicators, sponsors, people in the industry who are doing the research at a very intricate level. They're looking at migration patterns. They're looking at new home starts. They're looking at where the need is, right? Where that demand is located.
Where the companies are moving, where the jobs are going.
Right, exactly. And so that's research that an individual may not be doing on their own. Because it does take a lot of time and it takes a lot of resources and there's a lot of cost involved. I mean, we're involved in a deal where we're working on now where, there's like $2.2 million into the deal and it's not even closed yet. Right. I mean, there's a lot riding on this deal, but it's a super juicy deal, right? It's like 15% below market. It's, tons of upside to this building, but you don't get here if you always stay at that mom and pop level. So we encourage folks, everybody's built a certain way. And if they want to manage assets themselves, I do coaching. I encourage them. Yes. If you want to do that for a certain reason, that's great. Go do that and build. Eventually over time, you're just naturally going to flow towards syndication for one reason or another. Either you need more security, more cash flow, more depreciation to offset some other income,
more free time.
More free time. There's a lot of things that come with that syndication. So, and
if I can interrupt, what's interesting is that, if people were to drive down the street, every big project they see, a car wash, a self-storage facility, an apartment building, almost certain that not a single person or a single company came in and put that together. It was syndicated in some form by a group of investors. And so this is the day-to-day stuff. Every girl, we talk about ATMs. How about car washes? I mean, those are popping up all over the place, and they're syndications, and you can own, a piece of one of those. So yeah, I mean, it's really, it's interesting how really the country has been brainwashed to think that the 401k and the stock market is the way to go. And I'm an extreme where I have almost nothing in the stock market, and I'm not suggesting that everybody should do that, but they should really take a look at this stuff. And like in the hard part, when you're coaching somebody, or whether I am, it's like the world of alternatives is so big. I say, well, where should I start? Well, you got to figure out who you are as an investor first, because there's not an easy answer to that question. Here's the landscape, and you're probably going to have to try a few things to figure out, I don't ever want to do that again.
Yeah. And so that's where, leveraging somebody who's done it before, right? Somebody like yourself, right? I've been involved in a lot of different things, right? To be able to leverage somebody who's already done it, who's lack of better term, that trial and error, right? We've already lived it. Leverage us and fast track yourself to a better place.
Yeah. I call it a straighter path from here to there, without the one step forward, two step back, to the left, to the right,
Yeah. So what I asked this question of a lot of folks, and I'm curious what your take is on this. So what do you think is preventing people from taking action today? Because I'm sure you come across a lot of people like I do who, just for whatever reason, they're not taking action. Like, what can people out there, if they're paralyzed, like what are some simple things, low-hanging fruit, simple things they can do to take action?
Yeah. Well, I think the reason that people are stuck is because think of it's like when Galileo said the world is round. Everybody knew that the world was flat. Everybody. So if you're this employee, everybody, your parents, your brothers, your sisters, your coworkers, your friends, everybody is working for a company, and they're investing for their future in a 401k. And, the 401k is sold on the tax benefits and the company match. And so you're the you might be the only you and I might be the only person somebody's ever said that, this will be me, and I'll speak for myself. 401k sucks. It's a bad tool. You should probably not use it 99%. There's maybe a few instances where it makes sense. And so if you're the only person that's saying that, they're going to think you're crazy. You have to, and in the resources section of my website, you got to start reading books. You got to listen to podcasts. And the nice thing about living in this day and age is that there's so much information that's out there, and most of it's free. So if you want to learn something or get exposed to something else, it's very easy to do. So you got to start with putting some different stuff in your brain.
You mentioned, and there are a lot of books and podcasts out there. What would be like 1 or 2 recommendations for a book and 1 or 2 recommendations for a podcast?
Well, I would have to go back to, in terms of the book, of course, Robert Kiyosaki's book, Cash Flow Quadrant and Rich Dad, Poor Dad. And I would also go with the second edition of Tax-Free Wealth by Tom Wheelwright. I think the lowest hanging fruit is really taxes. If you say, well, I want to double the ROI on my investments from 10% to 20%,
Yep.
You can do that by 2 ways: making riskier investments. That's conventionally people think that, but really the easier way is to restructure yourself, start acting like a business, and cut your taxes in half. So there's a couple books there, and there's actually a series of books by a guy named George Antone, Debt Millionaire, The Wealthy Code, and The Banker's Code, where he talks about a little bit like Robert Kiyosaki and money in a completely different way. So there's a few books there.
Okay, what about podcasts? I know a lot of people listen to podcasts on their way into work or picking up the kids, soccer camp, whatever it is. What's 1 or 2 there they can listen to that you like?
Yeah, I started with this had been 10 plus years ago, and a guy said to me, "Hey, I met a guy at a local real estate investor association." He said, "Hey, Chris, you should listen to the Real Estate Guys podcast."
Mm-hmm.
And my first question was, "Who are the real estate guys?" And my second question was, "What's a podcast?" Right?
Yeah.
So anyway, the Real Estate Guys are really good. They cover a lot of this stuff. And Tom Wheelwright has got the Wealth Ability Show.
Yeah.
Robert Kiyosaki's got a podcast, and I'm if you listen to Passive Investing from the Left Field, then the Left Field Investors is a community where there's really a lot of deal flow and stuff through there. So when you get to that point where you want to see what's out there, that's a great place. And they've got some great resources on your website, like which syndicators, what are their minimums, and which ones will take non-accredited investors. Sometimes that stuff's really hard to find out, so
no, those are great resources. And again, for the viewers, for the listeners, stay away from the doom and gloom, right? That just paralyzes us. I know sometimes it's fun to watch or listen to, but really gravitate more towards the education piece, folks that are actually going to help you understand yourself and what you should be investing in, and just helping you get to a greater place. Chris, and you're doing that, and I appreciate your time having come on here. I appreciate your time to chat with our audience. For folks that want to get a copy of your book here, Get Off Your Ass and Manage Your Money, where can folks get this book?
Yeah, just go to the website, theprolificinvestor.net. There's a flashing copy of the book right there. It'll take you right to Amazon. And so that'll at least get you to the resources that I have on my website, and it'll take you right to the link. So that one-stop shop, all my articles, videos, resources, social media, it's all right there. So theprolificinvestor.net.
All right, Chris, for folks that want to connect with you deeper, is there an email address you want to share, or social media? How do folks connect with you to have a deeper conversation?
Yeah, the best way is to go to the website at theprolificinvestor.net. There you can get to my articles, my videos. There's a link to where you can buy the book. And most importantly, probably you can schedule a free 30-minute virtual coffee with us, and we can get on a Zoom call for 30 minutes and talk through some of your issues, questions, and concerns. So theprolificinvestor.net.
Awesome, Chris. Thank you so much for your time today. You've helped a lot of people here who may be paralyzed. Take some action. Books, podcasts, reaching out to you for that free 30-minute conversation. That's gold. So, Chris, thank you so much for your time today.
Hey, thanks, Tony. I appreciate you having me on.